Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Another whipsaw price action overnight pushes the Australian dollar closer to its objective, which is seen at 67.35. Having printed a high of 29 overnight, the market is a little bit hesitant as it approaches this level. As we've recently seen, it is a key point. Back in early March, we saw a very heavy sell-off. So let's see how the market plays into today at the 67.35 level, and if breached, would give further exposure to the upside of 67.85.90. However, as I mentioned, a little bit of a hesitancy emerging from this region. So let's see if the bulls have the momentum in clearing the level. Moving on to the euro, the market is still maintaining its topside cap around 107.15 as the dollar index, which measures the greenback strength against a basket of 6 major currencies, is just slipped under 103 and trades at 102.90. Looking ahead, the Fed will begin its two-day policy meeting on Tuesday as policymakers consider whether still inflation is too hot that merits an interest rate hike. However, many feel that the Fed may actually keep rates on hold due to the recent banking crisis, while others are expecting the US Federal Reserve may stay on course and approve a 0.25% base point or 25 base point rate hike at its conclusion of its meeting on March the 22nd. With its target around 4.5 to 4.75, a 25 base point would lift it to 4.75 to 5%. So as I mentioned, looking at the current price action for the euro, the 3-day challenge that continues to see momentum up to the top side is still an inside range day as the market still hasn't quite been able to recapture momentum to clear this engulfing candle, and therefore we would need to see a break above 107.15 to put the market on course to 107.80.85. But we need confirmation of a New York close for the dollar index if it can stage a further fall under 103. This would see further risk to the downside for dollar yen as traders continue to rush for safe haven yen demand, which has pushed the market lower and at present holds to a downside trajectory of 129.80 to 130.15. A very whipsaw price action in the last 24 hours as the market did attempt to recover but found very much a tough challenge above the 132 handle. So all eyes on the downside, but I feel there could be, like previously we'd see back here in early February, demand emerged from that 129.80 to 130 area, so may do again. The sterling, well, the market's rallied on and now clears the 122 handle and looking on now towards the region of 123.10. In respect of the current pattern, it's still relatively strong and therefore we could see this challenge, but like previously around 123, the market back in December and along with that back in January, there was good supply and the bears are still likely to be camped out above 123. Having surged and posted a Marubozu candle, which is very bullish, there wasn't any bulls in the recent challenge overnight as the market rejects the 2000 level and now tumbles back to the key point, which is seen at 1966.67, a level that if breached or closes beneath there would see further of the gains pared back and look towards the bottom side around 1938 and reassess from there. A very whipsaw price action for oil took the challenge to its objective of 64.5 to 64.75 and posting a 64.36 low. The market rejected very clearly from this region, and from that it's put a slightly bullish pattern in play, which is close to a hammer, which if we see a break above 68.80, then I feel that we are looking on towards $72. We were extremely oversold and the trend is overheating in terms of a bear case, so it is due for a correction. Well, that's a wrap for the morning. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.